Yes, we own Swatch. I think, as you mentioned, luxury is recovering strongly, and also the watch industry is recovering.
The currency trends also look supportive at this point, and this was something I raised with Nick Hayek, but he said, you know what, at the end of the day, the currency markets will do what they do. We can't affect that outcome, but we can benefit. Are you seeing evidence the Swiss luxury industry is doing better on the trends in the Swiss franc right now?
Yeah, absolutely. I think the weakening of the Swiss franc, especially against euro, is positive for the luxury industry. But you mentioned currency is very difficult to forecast, but I think for this year the impact will be definitely positive, given that made in Switzerland, so a majority of the cost base of the watch industry is based here in Switzerland.
And one of the real drivers seems to be the return of the Chinese consumer. Is there solid evidence that the Chinese luxury shopper is back?
Yes, the Chinese consumer is back in full force. All the numbers that we have seen over the past 2-3 quarters, I think the biggest surprise for all the luxury companies that have reported were coming actually mainly from Asia and driven by mainland China.
And are they back to stay? I mean, that's the question I think we're all asking. We're worried about some of the debt trends and some of the broader economic trends. Do you think the middle class is still growing and still keen to buy high-end luxury?
Yes, I think the appetite of Chinese for luxury is here to stay. The other thing is, I think the Chinese as a country has proven that they have managed to avoid the hard landing that many were predicted 2-3 years ago. I think in general, investor confidence towards China has increased. It seems that even this year they will again grow 6.5%, and consumption, of course, given the rebalancing of the economy, will continue to grow above average.
Is there a lot of headroom in these stocks? Because when you look at the valuations, even Swatch with a PE somewhere in the mid-20s looks a little bit pricey.
It's a good point. The crux with luxury stocks, and given that I have covered this industry for so many years, is when it recovers and then strongly. So you better be in before it goes up. But I think currently estimates are not too high. If you look at the first companies that have reported first quarter numbers, it seems that they were still able to beat expectations by quite a bit. So I'm quite confident for this year.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.